Hello and welcome. Yesterday, I assumed that the euro and British pound's upside potential would be limited. As expected, the euro failed to stay firm around monthly highs and entered a strong downward correction. In the Asian session, the European currency continued its decline, passing over 120 pips from its high posted on Tuesday. The pound sterling showed similar dynamics but remained within an ascending channel. As for the euro, it's obvious that the price has got stuck in a sideways range. Moreover, it's likely to remain range-bound all this week. After all, the geopolitical situation is uncertain. House Speaker Nancy Pelosi's visit to Taiwan, China's threats to take retaliatory measures and its military drills around Taiwan, all these dampens investor optimism. Nevertheless, things seem to be stabilizing, with market participants taking notice of other macroeconomic releases. As for today's fundamental statistics, the calendar includes a series of reports on services sector activity as well as composite PMIs for the euro area and its member states, Britain and the United States. The headline IHS Market Eurozone Composite PMI is expected to stand at 49.4, while a reading below 50 indicates a counteraction. In addition, the euro area will report data on retail sales for June. However, this report will hardly be of great importance as the recent statistics on GDP growth have come as a surprise to traders. Furthermore, the US is set to publish data on factory orders and the ISM non-manufacturing employment index. If the indicators exceed market expectations, the US dollar will extend gains. Moreover, a measure of US services industry activity in July is anticipated to rise to 52.7. Given exacerbating tensions between the US and China, these will be enough to boost demand for safe haven assets, including the US dollar. Now, let's take a look at the euro-dollar trading chart. From a technical point of view, it's worth focusing on 1.0193 and 1.0233. A false breakout at these levels will create a strong sell signal. In this case, the euro will have a chance of breaking through 1.0152. Its top-down test will open the way to 1.0115 and 1.0082. At the level of 1.0082, it will be possible to go long on rebound. Long positions at 1.0115 or 1.0152 can be considered only amid a false breakout, as I expect the pair to be hemmed into a sideways range. If bulls are able to gain control of 1.0193 following today's upbeat statistics from the euro area, its top-down test will create a buy signal. However, the pair's bullish run is likely to be limited by 1.0233 as it coincides with moving averages. The key target will be 1.0278, where I recommend going short on rebound with a view to catching an intraday correction of 30-35 pips. Speaking of the British currency, the situation is similar. It's necessary to protect 1.2146, the lower boundary of the ascending channel that acts as support. If the price breaks through the level of 1.2190 and tested from the top down, a buy signal will come. In this case, the pound sterling will advance to 1.2235 and probably 1.2284. At the mark of 1.2284, it will be a wise decision to go short on the rebound, as I expect bears to take the lead. A false breakout at 1.2235 or a failed attempt to rise above 1.2190 during the European session will lead to an increase in the volume of short positions. If the price breaks through and fixes below 1.2146, the British pound will tumble to 1.2107 and 1.2066. These will move the quotes to a new wide sideways range. At the level of 1.2066, traders will be able to go long on a false breakout, counting on an uptick to 1.2107. Likewise, going long at 1.2107 will be relevant only in the event of a false breakout, with a view to catching and pushing the price to 1.2146 by late trade, so that the pound-dollar pair remains within the ascending channel. Best of luck.